Okay, so big tech just reported their earnings yesterday. We have a lot to go over, so let's jump into it. What's up, everyone? I'm Brad. Welcome to the Money Dad channel. If you're not a subscriber yet, please consider hitting that subscribe button so you can continue to see videos like this. Let's jump into these earnings. So big tech oh my god, toddlers are in full force this morning. So big tech reported earnings yesterday, and by big tech I mean Facebook, Apple, Amazon, Google, Twitter, and then the evening prior was Pinterest, which I will get to later because it's a big story there. So let's start with those big four: Facebook, Apple, Amazon, Google, because that's what I talked about earlier in the week. I said they're all reporting earnings after the market closed on Thursday. So when the market opens on Friday, you could see a pretty crazy day because these investors are now trading with new information. So markets look not too bad right now. It's about down 1%, and largely because of these earnings. So let's get into it. So Facebook revenue up 22%, users up everywhere except for the United States. Stock down 1%. Apple, iPhone sales down 21%. This is because they pushed their iPhone 12 reveal event back a month because of the pandemic. So iPhone sales understandably down. Nearly everything else is up though, right? iPad sales, Mac sales, things like that. Their stock is down 4% right now. Amazon, sales are up 37%. They have increased their staff by 50%, but their stock is down 1.5% right now. Google, YouTube ad revenue is up 32%. These are massive numbers for the size of these companies, right? Google is a $1 trillion company, and they added 32% revenue year over year in one of their areas, right? Amazon is a $1.6 trillion company, and they increased their sales 37% year over year. These are the biggest companies in the world, and they're still considered growth stocks. They're not value stocks at this point, and it's just insane. Anyway, Google, of the big four, is the one that is up, and it's up pretty big. It's up 7% right now. And that's because their digital ad revenue overall, not just YouTube, but all different kinds of ads, all different kinds of ad revenue, was negative in the last quarter, and it flipped positive. So they're back to positive growth. And that's why Google hasn't done as well as the other tech stocks since the big sell-off in March. It's still done well, but it didn't just have that. It didn't have that explosive growth that a lot of the other tech stocks did coming off of those March lows. Like this is Apple, and it's just going straight up. Whereas you compare it to Google, you can see it just kind of got back to where it was before the pandemic, a little bit higher, and it's been chopping around. Look at Apple, for example, pre-pandemic. This is pre-pandemic levels. I mean, Apple got there in June and has just exploded to the upside since. So that's just a quick comparison of Apple and Google to show you that Google hasn't really done as well. It's done well, but not as well as the other big tech stocks in 2020. And that's because their digital ad revenue was negative for a quarter, and now it's flipped back positive. So that's huge for Google going forward. So investors liked it. Stock is up 7%. All right, now let's flip over to two stocks that I did not talk about earlier in the week that did report earnings yesterday and the night before. Twitter's stock price is down 17% right now. And that's because they almost had no user growth at all. They added 1 million active users this quarter, where the street was expecting 10 million. So they basically stagnated. 1 million is almost nothing in the social media user growth game. When you're expecting 10 million users added in the quarter and you only get one, that's a huge miss. So Twitter is taking a beating right now. Now let's talk about a stock that I thought was dead. Pinterest. That is a loud dog. You all right? Okay. So Pinterest, I think a lot of people thought the stock was dead. I did. I haven't used Pinterest. It's a social media app, kind of a shopping app. I think it started out as just social media to just post nice looking pictures of things, and then it evolved into, okay, these pictures are clickable. You can go to the store that sells this item that's in this picture. So it's kind of a platform for connecting consumers to online stores. But this was, I haven't used Pinterest in over 5 years, I think. I actually did just start using Pinterest when I started this YouTube channel, because I'd go and post a video, and as soon as you post a video, you get this pop-up with, hey, where do you want to share this video? And it just gives you this list of all these social media outlets, and Pinterest was on there. I was like, I haven't used Pinterest in probably more than 5 years, but hey, I remember I have an account and it's on this list, and I'm trying to get my channel out there. So boom, I've been sharing my finance videos on Pinterest. So that's one active user that they got back over the last month or two. But the story here is they added 26 million users in this quarter, when this company was dying before 2020. All the dogs. So this stock is back from the dead. It's pretty amazing. Plus 26, they added 26 million users this quarter alone. Their revenue year over year has jumped from 280 million this time last year to 442 million. So massive revenue growth, massive user growth. And for that, their stock right now is up 27%. Now, they reported earnings Wednesday evening. So all of this growth, all of the stock price growth, 27%, is after it's had a day to settle down a little bit in the market. So even after selling off a little, people taking profits, it's still up 27%. So big story for Pinterest going forward. I think this one's back. I think Pinterest is back. They have a real monetization business plan. It is working. They're not profitable yet. They're close, but they're not profitable. But I think with this kind of user growth and this kind of revenue growth and their monetization model already in place, I think they're going to be profitable soon. So this is a very interesting stock. It's got my attention. I'm watching it. I might buy it soon. I might wait for it to come back down to earth a little bit. That said, it might not come back down to earth. Who knows? Usually when you see these kinds of blow off tops after earnings calls, they do come back down to earth a little bit. Some people take profits, and then you have a buying opportunity at a little bit better price shortly after. Anyway, so that's big tech. Those are the big earnings reports from the last day and a half or so. Like I said, the broad overall market is down. This is Friday. I'm recording this Friday morning before the market opens, and the market, pre-market, is down about 1%. And that's because the heaviest stocks, Apple, Amazon, they're both down. And the biggest stock, Apple, is down like 4 or 5% right now. So of course that's going to weigh pretty significantly on the market. So that's why the overall market is down 1%. Google being up 7% is just not enough to outweigh Apple being down 4%, Amazon being down 1.5%, Facebook being down 1%. So it's just not enough. So it looks like we're going to have a down day unless we see buyers come in when the market opens and start to buy up this weakness, because there are silver linings here in these reports, right? We knew iPhone sales were going to be down because they pushed the iPhone 12 reveal event back a month. Everything else in Apple's arsenal was up in that earnings call. That is a silver lining. Amazon, massive sales increase, massive staff increase. For some reason their stock is down. I mean, I feel like that stock should be up right now personally. So I think we look good going forward. I'll be keeping an eye on these stocks today and over the next few weeks, and always, because I love these stocks anyway. But that's all I got for this video. Thank you all for watching. If you enjoyed it, please hit that like button, leave a comment down below, and I'll see you there. Thanks.